Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, March 9, 2009. The pound was sold off heavily in today's session as UK bank shares were pressured in London trading. The pound-dollar pair rallied last week to the 1.43 level on Friday, though it gave up a big chunk of its gains in late Friday's session. Today, the pair plunged 400 pips, breaking below a zone of support near 1.40 to test 1.3750, the lowest level the pair has been since January 25th. The pound fell as Lloyds Banking Group said its shares may be diluted by an insurance deal with the British government. In exchange for insuring up to £260 billion of assets, the government will increase its stake in the bank to 77% from 43%, basically nationalizing the bank. The news also weakened other financial stocks in Europe, such as Barclays, which could be next in line to agree to such a deal. The pound-Swiss franc pair tumbled around 380 pips from its intraday high and is now 600 pips lower than its level last Thursday. The pound will also be pressured by the start of quantitative easing by the Bank of England, which has put the yield on 10-year British government bonds, also known as gilts, below 3%. In a third look at a pound cross pair, the euro-pound pair surged 200 pips in a strong breakout following a break of resistance at 0.90. Safe to say, traders do not like what they see coming out of the UK today, and today's sharp falls, though there might be a pullback in the short term, may signal further losses in the week and weeks to come. The euro-dollar pair fell overnight in favor of the greenback, sliding about 150 pips from its global open near 1.27. Stocks were battered in Asia and Europe, and traders looked for safe haven in the dollar, as the World Bank predicted 2009 would be the first year since World War II that the global economy will contract. After touching 1.2555, the euro regained some of its losses as U.S. stocks started higher, or at least were treading water in the morning New York session. The dollar-yen pair extended its rally from Friday, reaching 99.15. The greenback was up against the yen as data showed that Japan posted its first current account deficit in 13 years, which pushed the Nikkei 225 stock average to close at a 26-year low. Therefore, except against the pound, the yen did not see much gains despite the rise in risk aversion overnight. In a final pair today, the US dollar-Canadian dollar rose above 1.30 to test 1.3060. That broke very important resistance at the 1.30 level that the greenback was unable to breach late last year and last week. The loonie was weakened by concerns over the global economy, though oil prices did climb today. The greenback's rally stalled at the 1.3060 level in New York morning trading. As we mentioned earlier, Japan posted its first current account deficit in 13 years in January in non-seasonally adjusted terms. The deficit stood at 172.8 billion yen. In seasonally adjusted terms, the current account was positive, but it came in below expectations. The Japanese economy is being pressured by weak exports, which is causing companies to cut output and to fire workers. Unemployment in Switzerland increased to 3.1% in seasonally adjusted terms and to 3.4% in non-adjusted terms. That's the highest unemployment in nearly 3 years as the recession in the country continues to take a toll on the labor market. The unemployment rate has increased by 1% in the last 6 months. And in Canada, annualized housing starts declined to 135,000 in February, falling below expectations of a decrease to 149,000. With increased listings and reduced sales in the existing home sales market, the impact on housing starts is palpable. Tonight, the UK will release its BRC retail sales monitor and the RICS house price balance. Australia, meanwhile, will post its business confidence. Overnight, Germany will reveal its trade balance and final figures for consumer prices. Continuing overnight, the UK will release its manufacturing and industrial production data, and the Eurozone releases its PPI. Tomorrow, the US has one release, wholesale inventories, though Fed Chairman Bernanke will give a speech about the financial reforms underway to address systemic risk, which may impact currency markets. And that concludes our show for today. Thank you for joining us here at CMSFX.com, and happy trading.